DeFi and TradFi integration. Explained the blending of decentralized finance, DeFi, with traditional finance, TradFi, is a breakthrough that seeks to bring the best of both systems into one. By combining DeFi's transparency and open accessibility with TradFi's established structure and regulation, this integration has the potential to reshape financial services. Synergies between DeFi and TradFi. 1. Enhanced accessibility and financial inclusion. DeFi enables access to financial services for anyone with internet, bypassing restrictions like geographical barriers or banking access that often limit TradFi. Here's how this could change financial inclusion. Cross-border transactions. DeFi allows for quick and low-cost international transactions by using blockchain to reduce middlemen. When TradFi institutions like banks integrate DeFi's cross-border capabilities, it could make sending money internationally faster and more affordable. New financial products. DeFi platforms can offer products such as decentralized loans and stablecoins, which aren't as common in traditional banking. If TradFi institutions adopt these products, it would expand financial options for a broader audience. 2. Efficiency and cost savings automated processes. DeFi operates with smart contracts, which are self-executing contracts on the blockchain. These can automate transactions and other financial processes, reducing the need for back-office work and manual checks. When TradFi institutions use smart contracts, they can simplify complex processes like settlements or compliance checks. Lowered costs. DeFi's blockchain-based model cuts down transaction fees and administrative expenses. This means TradFi can potentially save money by incorporating blockchain technology, ultimately making financial services cheaper for clients. Innovative financial offerings. Investment opportunities. DeFi has introduced financial options with higher yields than those typically found in traditional markets. For example, yield farming in DeFi, where users earn returns on their digital assets, has no direct equivalent in TradFi. Incorporating such products could attract investors who are looking for returns beyond what traditional banks offer. Custom financial solutions. DeFi's flexibility allows for highly customizable financial products. TradFi could use this flexibility to create more personalized options for clients, like unique investment portfolios or custom lending terms. Challenges in bridging DeFi and TradFi. Different regulatory environments. DeFi is largely unregulated and decentralized, meaning it operates without the oversight. Traditional banks have. TradFi, however, is heavily regulated and must follow strict rules to prevent fraud, protect consumers, and meet Know Your Customer (KYC) and anti-money laundering (AML) standards. Creating a regulatory framework that fits both models is a significant challenge. Cross-border regulations. DeFi operates globally, with users across various jurisdictions. Integrating with TradFi involves navigating regulations that differ widely between countries. Achieving international alignment on how to regulate DeFi is an essential yet complex task. Technology and compatibility system. Compatibility. DeFi uses blockchain technology and often has different technical requirements than traditional banking software. Creating a bridge between these technologies so they can talk to each other seamlessly is critical. Interoperability. Ensuring DeFi platforms work smoothly with TradFi systems requires standards for data exchange and transaction processing. Without standardized protocols, integrating DeFi with TradFi is challenging. Security and risk management. Cybersecurity. Risks. DeFi platforms are exposed to online threats like hacking and smart contract vulnerabilities. When linked to TradFi, these risks could carry over, making security a top priority. Complex risk management. DeFi has risks like high market volatility and specific smart contract risks. TradFi will need to develop new frameworks to manage these risks effectively in a hybrid system. Real-world examples of DeFi and TradFi collaborations. 1. JP Morgan and Quorum. Objective. JP Morgan developed Quorum, a private Ethereum-based blockchain, to improve internal processes such as trade settlements and record-keeping implementation. Quorum allows JP Morgan to conduct transactions that are secure and private, meeting the needs of traditional banking. Outcome. This case showed how DeFi technologies could improve traditional banking operations. JP Morgan's successful use of Quorum led to further blockchain projects and collaboration with other financial institutions. MakerDAO and Circle's USDC objective. MakerDAO integrated Circle's USDC stablecoin into its ecosystem to enhance the stability of its decentralized DAI stablecoin. Implementation. By backing DAI with USDC, MakerDAO could provide a more stable and regulated option, which in turn made DAI more attractive to users. Outcome. This partnership improved DAI's reliability and liquidity, demonstrating how DeFi can benefit from collaborating with regulated TradFi assets to offer a more stable experience. Coinbase and DeFi protocols. Objective. Coinbase integrated various DeFi services, making decentralized financial products like lending and yield farming accessible directly through its platform. Implementation. By offering DeFi options and educational resources, Coinbase provided users an easy way to engage with DeFi through a familiar platform. Outcome. Coinbase's integration helped introduce DeFi to a broader audience, acting as a bridge between traditional investors and the DeFi world. Future of DeFi TradFi integration. Trends and predictions. 1. Growing partnerships and joint ventures. Expect more collaborations between TradFi institutions and DeFi platforms, especially as banks look to leverage blockchain technology to offer a broader set of financial services. Hybrid products. Traditional banks may partner with DeFi projects to create products that combine blockchain's innovative features with the security and stability of traditional banking, like decentralized lending with regulatory oversight. 2. Improved regulation and compliance unified standards. Regulators might develop frameworks that bridge the gap between DeFi's decentralized environment and TradFi's compliance requirements, such as universal KYC, AML standards for DeFi platforms. Innovative compliance solutions. Decentralized identity verification and on-chain compliance mechanisms could make it easier for DeFi to meet regulatory standards without undermining decentralization. Evolution of financial products. Hybrid financial instruments. Financial products that combine DeFi's programmability with traditional securities, like tokenized assets, could provide new investment opportunities. Decentralized TradFi services. Services like insurance, loans, and wealth management could be decentralized, giving users more transparency and control over these products. Technological advances. Interoperability solutions. Cross-chain technology will allow assets and data to move freely between DeFi networks and traditional financial systems, fostering smoother interactions. Scalability and performance. Advances in blockchain technology, like faster transaction processing, will make DeFi more suitable for large-scale adoption by TradFi. Integrating DeFi and TradFi has the potential to make financial services more inclusive, efficient, and innovative. While the journey to convergence is complex and requires cooperation, regulation, and new risk management tools, the benefits of combining these systems could redefine the future of finance, making it more accessible and tailored to the needs of the digital age.